This is Hillary Kramer. I am live from the Dallas Money Show, and I'm very pleased today to have with us Mary Anne and Pamela Aden. They are the matriarchs of every area of investing, 37 years as fundamental and technical investors, spanning foreign exchange, the commodities including metals, equities, and fixed income. So we have quite a few questions to ask you, given where we are right now at the crossroads in this market. Let's start with where we are in the stock market. What would you say is the actionable advice you would give investors, given that we are at the top of the market, but we have a 10-year U.S. Treasury yield that keeps dangerously rising higher and higher?
We are at an interesting point in the bull market. Even though it's 10 years old and it's a wonderful bull market, we still think we're like in the 7th inning of the bull market, and we still have higher highs for maybe the next year or two. But we're on the other hand a cautious bull because of the rising interest rates. Right now it's not a problem even with the new highs, but it can be eventually.
Okay, what about commodity prices though? With oil hitting new recent highs, for example, do you have any concern that certain sectors are going to struggle with those higher commodity prices of oil, the input price? And are there any areas or sectors that investors should be entering right now because of that?
Well, actually, the higher oil price has been very good for the energy shares, obviously, as you'd expect. And the industrials have been doing very well. And the other sectors that we like are the tech sector, even though they've been volatile, but they're still doing very well. And for the most part, most of the stock market as a whole has kind of shrugged off the higher oil price, I should say. And it has been good for the energy shares, but it hasn't been so high that it's really hurt or squeezed some of the other sectors yet, but it could.
Okay. Now, just so our viewers can become a little more familiar with your investing style and technique, would you say that areas such as inflation that's rising, concerns about trade deficits, contentious trade, trading partners and terms, as well as even demographics are concerns these days?
Yes, there's a lot of concerns, and there's always a wall of worry. But in this case, this year has been a lot. The trade tension, and it's still there. It's still to be seen how it's going to work out, and that certainly is a concern for the markets, and to see how it ends up being. The midterm elections as well, and the higher inflation will also mean higher prices, and inflation is creeping up. It's near 3% in the U.S. today. So yes, that is a factor. That's not a problem yet, but it could be a factor going forward. And the trade, once it happens, it can raise prices. It can end up going into or give some of that to the price of the consumer. So yes, we see inflation as something that's viable, which will end up being good for the gold price, good for precious metals.
Okay. Well, very shortly we're going to go into our new earnings announcements for the third quarter, which just recently ended. Do you have any concerns about what we might hear about 2019, the messages that we may be receiving because of some of these concerns that could be an overhang on the market?
We are beginning to hear some of these warnings. A little bit. It's still premature, but there's some straws in the wind. But so far, the market, for the most part, has ignored any kind of bad news. Just keeps going up until just recently, with the interest rates going up, the market got nervous. So we'll have to see how that unfolds. But it looks like it probably will also shrug that off and perhaps keep heading higher.
So you're not concerned that rising interest rates, the rising U.S. Treasury, could be the tipping point that could bring down the real estate market, slow down?
No, we are, in the sense that at some point, the thing is that interest rates are rising from such literally 5,000-year lows. That's how low they
It sounds
got.
crazy.
It sounds crazy, but it's
So
true.
there's room to go, okay,
And so,
before we start to worry.
yeah,
I just have to ask you though, the last question as we're running out of time. As portfolio managers, as allocators, where is the perfect portfolio right now dividing up equities, stock, and commodities and cash?
Well, we have been with a good percentage in stock market in certain sectors, and we like the precious metals have a place there. Right now it's low, but it's certainly going to be rising. Resource sector is coming up, and for bonds, we're not in bonds because we think rates are going higher, so we're out of the fixed income market. And the currencies, the dollar is the number one for the moment, but we don't know how long that'll last.
Okay, well, your insight is as insightful as anything that I have heard at the Money Show here in these last 2 days. I appreciate your time, and we look forward to following up with you at the next Money Show.
Well, thank you very much for
Thank
having
you.
us.